Miguel Fernandez Ordonez does not need a real introduction to this group. He was here last year, and people, and we're not a beginners conference. I've told everyone, Miguel, and we're familiar. And I would like to just point out, I've been able to sneak along and get a PDF in English, but you buy your Spanish version, then you're allowed to morally get your our English version. But wonderful reading, and so let's look at what's going on. How do we go forward? We know there's been some talk about CBDCs, and how do we in practical ways change central banking, and what are the mechanisms for that? And so looking at the big picture like that, I'm going to turn the floor over to the former governor of Spain's central bank, and we're extremely honored to have you here, Senor Fernandez Ordonez. Gracias.
Thank you, Stephen, and thank you very much for your invitation to participate in this conference. I will share with you my view on the current debate on the reform of money and payment services. Because the debate on money reform has gained a great intensity and has spread to almost all the countries of the world. Just 3 years ago, in the spring of 2019, I had the opportunity to talk about money reform at a conference organized by the International Movement for Money Reform in Madrid. And I met some of you there for the first time. And it's amazing how the money reform debate has changed in these 3 years. Back then, there were very few people interested in money reform. Today, money reform is a topic that is being debated by several thousand people in most countries of the world. At that time, very few scholars, Professor Hammer, Hunhoff, Nippel, Ries, others, were interested in money reform. And today there are hundreds of academics who are researching on this matter. 3 years ago, practically all central banks thought that the issuance of digital public money did not make any sense, and they said it would create serious problems. Today, however, more than 100 central banks in the world are studying the possibility of issuing sovereign public money accessible to all citizens, what is known as CBDC, the acronym for Central Bank Digital Currencies. By that time, almost nobody was talking about stable coins, but now they are a significant alternative to bank deposits with more possibilities than other proposals, such Bitcoin or similar. Now we are in the middle of a big bang, of a revolution in the reform of money and payments. Last month, the IMF has published a document with this title, The Money Revolution. And it is not just a revolution in ideas. Today, there are already numerous private reform initiatives, such as cryptocurrencies or stable coins, that exist, which are being used by people. And China's sovereign digital money, the yuan, is not an idea anymore. It is already being used by more than 250 million people. This revolution can be analyzed from many points of view, but today I am going to focus on what should be the role of the state and the role of the market in the new system of money, payments, and financial services. The main problems of the current system are, on the one hand, instability, and on the other hand, the lack of competition in payment services. For several centuries, some economists denounced the problems of a system based on fractional banking. And to solve these problems, they proposed use public and safe money, sovereign money. And they won that debate in the 19th century. That explains why today all the physical money is public. It is sovereign money. Banknotes are issued by central banks in all countries, and they don't provoke crisis. But this has not happened with non-physical money, with money, with deposits. The deposits are not created by central banks, but by private banks. And these bank deposits have the same problems that the banknotes issued by private banks in the 19th century. Since then, most governments try to solve the problems of fragility of bank deposits, granting protections and privileges for banks and requiring prudential requirements. The problem is that this way to achieve greater security of bank money has had a disastrous collateral effect. The protectionism of the state has prevented and continued to prevent other non-banking private companies from competing in the provision of payments and in other financial services. In short, we have a system in which money should be public, but it is private, while the payment services that should be provided in competition on the market are, on the contrary, a kind of oligopoly built on the protections and privileges granted by the state. Because the most important decision when reforming any economic sector is to establish the role of the state and the role of the market. It is essential to get it right when setting what should be left to the free decision of the individuals and what should be based on the intervention of the state. The history of economic reform since the end of the Second World War is the history of modification of the role of the state and the market in the provision of goods and services. And these reforms have been adopted pragmatically and not ideologically. Regulatory reform have consisted of leaving to the market what it does better than the state and leaving to the state what it does better than the market. The changes in this regulation has been spectacular. I am not going to enter in that: trade, telecommunications, transportations, a long list. But what we can see about the financial sector. Talking about the financial sector, it is important to distinguish two segments within the financial sector. On the one segment, the banking sector, and on the other hand, the non-banking sector. And the non-banking sector, now in the financial system, consists of numerous activities such as shares, stock markets, bond markets, investment funds, pension funds, money market funds, derivatives markets, investment banks, hedge funds, private equity, etc., etc., etc. And nowadays, the non-banking sector is more important than the banking sector, which has been reducing its weight in the financial sector, and now deals practically only with payments and loans to households and small and medium-sized enterprises. The evolution of the regulatory policies in these two segments of the financial system has been totally different. On the one hand, in the non-banking segment, there has been a development similar to other economic sectors in the sense of allowing consumer users and companies to decide freely. The state intervenes only in those areas in which its role is necessary, such as the protection of consumers and investors, antitrust policies, transparency requirements, data protections, etc. Then today, the non-banking financial system functions fundamentally under the discipline of the market and only with the justified interventions of the state. And what has happened with the other part of the financial system, that is the banking system? How has banking regulation evolved since the 19th century? Well, it has gone in the opposite direction, in the sense of increasing the role of the state. Currently, the banking sector is the most intervened and protected sector of all the economic sectors in any country in the world. It is curious that this is ignored by most of the population, who think that since the banks are private, mostly, they are supposed to function according to the market economy. But it is quite the opposite. It is true that today, in most countries, the ownership of banks is private, but the banking system is a system fundamentally penetrated by state interventionism and protectionism. The justification of this excessive state intervention in banking is the fragility of private money and its instability problems. Indeed, the growing accumulation of anti-market regulation is explained by the fact that most of the money we use now, that are bank deposits, are not true money, but promises to repay money. And the problem appears when the banks cannot fulfill that promise. They cannot return money to depositors and the flow of money collapses. As I told, in the case of physical money, the solution to the fragility problem was found by requiring that all money be public sovereign. But in the case of deposits, it was wanted to remedy those problems of fragility of deposits by increasing the protections and privileges of the state to the banks. Since this was not enough to avoid crisis, it was necessary to increase the interventionism of the state in their economic decisions, fundamentally in the assumption of risks. Let me give you some examples. One of the most important state protection was introduced in the second half of the 19th century, that is of using central banks to lend to private banks when they are in trouble. It was done through a mechanism called lender of last resort. But now central bank financing to private banks has become a permanent function. Another important privilege was the creation of deposit insurance, which has been perhaps one of the interventions that have most prevented letting market discipline to act. This policy of increasing the privileges of the banks and massive state interventionism to try to correct the problems of instability created by bank money has continued until today. Even to prevent a banking crisis from occurring during the recent pandemic, protections for banks have been increased in many countries. This attitude of complacency with the current interventionist regulation of money and banking activities has been maintained until practically 3 years ago. Regulators and central banks never thought of changing the monetary system. But as has happened in other economic sectors, the possibilities offered by the new technologies to do things differently and to improve the services provided to citizens have put an end to the peace of minds of regulators and central banks. The money revolution has inspired new proposals of digital currencies that in principle could replace bank deposits. Indeed, the current debate focuses on the advantages and disadvantages of old and new digital currencies. On the one hand, bank deposits, which is the digital currency still most used in all countries. Second, CBDCs, or public sovereign digital money. Third, the so-called cryptocurrencies such as Bitcoin and similar. And finally, the so-called stable coins that are cryptocurrencies, but with a promise to return the fiat money, dollars, euros, whatever, that has been invested in them. We all agree, I think, that a sovereign currency like the CBDC being a safe asset and having no credit or liquidity risk has all the advantages of stability compared with the fragility of the bank deposits. And what is more important is that CBDC do not need any state interventionism to ensure their stability. With CBDCs, we will not need a lender of last resort. We will not need deposit guarantees. We will not need bailout banks to prevent them from going bankrupt. And not having these protections and many other state interventions it will be easier to establish a payment system based on competition and the market rules. Therefore, what we must do now is support the launching of CBDCs, digital dollar, digital euro, and so on, and be interested in the design of the CBDCs, because there are many design characteristics that can make one CBDC model better than another. For example, privacy, or who should obtain the benefit of seigniorage, or those determining the powers, functions, and independence of the central banks, and so on and so on. But in addition to this public money of CBDC, there are new proposals of private money, such as cryptocurrencies and stablecoins. As for cryptocurrencies such as Bitcoin and other similar ones, it is difficult for them to be used as currencies, as means of payments, due to their volatility. The fact that they cannot be money does not mean that their regulation is not important. What I want to say is that since they have no possibility of replacing blank deposits, I am not going to talk today about them. And finally, unlike crypto assets, stable coins can become a true means of payments that could replace bank deposits. For this reason, they have caused alarm in central banks and explained their interest in issuing public digital money, CBDCs. Talking about the stablecoin, it's very important to distinguish between different stablecoins. On the one hand, there are stablecoins not backed by any type of reserves. These stablecoins are very similar to cryptocurrencies in terms of their volatility and should have a regulation like cryptocurrencies. However, as far as reserve-backed stablecoins are concerned, they are a form of private money, much like bank deposits, in that they are not money, but promise to repay the money. And they pose stability problems similar to those posed by bank deposits. It is true that stablecoin reserves can be more solid than bank deposits, because they can use, for example, treasury bills and treasury bonds that are less risky than mortgage or consumer loans from banks. But they could also have problems in times of crisis, in case users want to convert the stablecoin quickly into money. That is why, in my view, the only stablecoin that should be accepted as means of payments are those that are 100% backed by public money, that is by CBDCs. This formula would be like the one proposed by Irving Fisher and the Chicago Plan economists to President Roosevelt in the 1930s, and may have the advantage of leaving more room for innovation in payment services. I finalize. The current debate of the money reform is awesome, and our obligation is to participate in that debate to defend public interests. And public interest can be summarized in two objectives. First, money must be public. Its creation must not be decided by private companies. But the second public objective is that payment services have the greatest possible competition between private and public companies that provide them. The state is necessary to have safe and stable money without the risk of bubbles or destructive crises, to have more effective monetary policy. And the benefits of money creation will be obtained by all citizens. And this necessitates supporting good CBDC design and requiring the stable coins to be backed by public sovereign money. And in relation to payment services, the state must not protect any private company. The state should exclusively grant investor protection, antitrust regulation to avoid monopolies, transparency obligations, data protections, and so on and so on. Today, money is private and payment services are strongly controlled by the state. We must achieve exactly the opposite, that the money is public and that payment services be provided in a competitive market. Thank you.
Thank you very, very much. Okay, I see two hands up, and I would like to get Howard and Martin Clancy to get their hands up, and I'm going to start with Domenico. Go ahead, Domenico.
Hello, Steven. Thank you. And hello to everyone, to Mr. Ordones. And I am Domenico from Italy, Moneta Bene Comune, AMMR. And I have this question for Governor Ordones, and it's about CBDC and how it's going to work. I mean, in the sense of the role of the dollar, no? What I'm studying in these last months here is, and I've been studying also in my PhD, is also the role of the leadership of the dollar and how this imperial currency is working since the Second World War, and et cetera, et cetera. Now that that we are facing these big changements and this somehow revolution of the CBDC, what do you think is going to happen with the dollar, with the role of the dollar, considering also what the White House, for example, just 3 weeks ago said about the role of the e-dollar that they are thinking about in the future, no? There is a statement on the White House website where they say that with the e-dollar, they want to reinforce their global financial leadership and competitiveness. And when you were making your speech, I was thinking about that. You were saying that the money will be more public and the financial system will be more on the market, you know. So my big fear is that the e-dollar will be somehow more easily going to make colonialism in the other economies. I don't know how, if I say well, but this is the question.
Okay, so
Well,
did you get that, Miguel? I could repeat it a bit, but you're good.
yes, yes. Well, it is difficult to know what is going to be the role of the dollar after all this revolution in the digital money that we are living. No, but I would say the following. Well, of course, there is one possibility that if United States do not have a great advancement in the digital money, on the one side, through the CBDCs, the digital dollar, creating a digital dollar similar to the digital yuan that now is used in China and in other countries, and many countries are launching that. And the United States, I think, are seeing two possibilities. One is the digital dollar, the CBDC, and the other is a stable coin that could have also the big advantages or using new technologies. Of course, if I cannot imagine the United States is going to be out of this progress. That's why I don't think that is going to happen. But if this could happen, obviously the people in the world could have the benefits and could use other digital currencies that are totally digitized. The cost of transactions are low, the possibilities of doing things. But then I suppose that the United States is going to create the digital dollar or regulate a kind of stable coins linked to the fiat money. But and then in that scenario, I think that the role of the dollar comes from reasons that we could understand easily. One is that most of the trade was did in dollars. And then that's what, if you have the trade that is done in dollars, logically, the money that you use and the currency you use is that. That's why many commodities, for instance, are priced in dollars. Then it's logical that if they are priced in dollars, you use dollars. And there are other things that is very important, especially that is that I think in the United States, the Estado de Derecho, you are Italian, I don't know how to say in English, the rule of law, no? The rule of law is really clear. And that is very important in the movements of capitals. Because if you have countries where they are not very serious in rule of law, they don't have a judiciary that is independent and so on, then people would like to have dollars. I mean, because you are more protected. That is, I think, is something clear, is one of the disadvantages, for instance, in China. Why China that is growing and so on? Well, because people do not believe that the judiciary in China is so independent when they are going to judge conflicts of capital movements and so on than in the state. And then that is a very good asset of the United States, that they have a good judiciary and role. That's why I think that probably the role of dollar will diminish, because other countries are going to reinforce the rule of law and so on and so on, and they would adapt to the weight of the United States in the new world that is lower and smaller than was in the past. But I see always that in collective, in the collective life, in social life, in history, inertia plays an enormous role. Then if the dollar has been very important for a long time, it's going to be very important. That happens also with the pound in the 19th century. And then it was the dollar who took the place, no? I mean, we should not discard a certain inertia also, no?
Mm-hmm. Thank you, Miguel. I'm just thinking. I'm thinking in the future too, that with the climate change, with wars, and with knowledge and the Zoom communication with many other countries around the world, and particularly African countries, poorer countries, that how do we lift everybody up with great awareness and greater equality for all citizens and abilities to try things. Okay, let's get on to Jeff Eder has the next question. Jeff.
Hello, Miguel. Thanks for being here. I'd like to hear you speak more on actually distribution. So to me, I don't think it's as critical, really. I'm not really concerned more about payment services or central bank digital currencies. I'm kind of a negative on that because we already have a digital currency. And it's really who controls that currency and how it's distributed. So I also belong to an organization, Progressive Money Canada, and we have a transition plan where basically we just get the central bank to absorb all the government debt. So we have consoles or paso doble, however you want to label it. But you just, expand the central bank's balance sheet as a transition. So all of that money would be funding productive government enterprises, like, for example, our medical system. So if you transpose like money that was originally gained from taxation and you created that money through a paso doble and then spent it directly in the economy, to me, in my mind, that would not create any kind of inflationary effect. But again, this is one thing that's not talked enough about, is the actual distribution. Once you create the money, okay, how is it distributed? Who distributes it? So I'd like to hear what your comments on that.
No, I think it's one of the questions that I mentioned when I said that it is important not just to have CBDC or sovereign money, but certain characteristics that you could have the advantages of sovereign money, but you could have more or less depending on the design, and that is in fact who is going to take the seigniorage, who is going to have the benefit of creation of money, who should decide to whom to give that money, and so on, is one of that. You have other privacy, you have many other characteristics, but that is very important because it's in fact the destiny of the creation of money, and who should decide that? My idea. I didn't read your proposal. My idea is that apart from transition, because I think that probably we need to enter in a CBDC system from bank deposits, you need a transition. It is impossible because you could say, well, if I have CBDC, I don't need to protect banks. I don't need to give lender of last resort. I don't need to save banks. I don't need to bail out. I don't need to give deposit insurance, but you have the banks. I mean, and it's an important industry and so on. And that's why it's important for me, a program of transition to convert the banks in intermediaries of CBDC that provide the good money, the public money, but that needs a lot of transition ideas to avoid a collapse of the banks. I mean, it's not, that's why I think that we have been protecting the banks and giving many benefits and so on during 2 centuries. Well, when I propose that, I am proposing to help the bank to stop being banks and converting intermediaries. And then I think it's good to help them. And probably we need to give them some money and so on, because once they have converted in that, you don't need to protect them. You don't need to give protection, not privileges and so on, but you need a transition. But forgetting the transition, that is very important, in a steady state of a CDC system, well, the traditional receptor of sovereignty of the creation of money has been the king. That's why we call seigniorage. The señor received that. One possibility is that you give that to the parliament and let the parliament decide, no? As any, and so on. It's one possibility. There are other possibilities that I like very much. That is to give to all citizens. You divide the amount of money and you give that. That would be a very good thing, because as we have a small inflation, if you are giving the money that is creating that inflation to the people, you are compensating the inflation. Then in all people, all from 2 months old to 19 years old, all the same. Or you could have a middle and say, well, half of the creation of money will go to the citizens and half to the parliament. And that would be based in the idea that in modern countries, half of the GDP is public and half of the GDP is private, no? Then you could have that. What is important is that, in my view, should we decide with an important law that is not going to change, because one of the advantages of having a CBDC system is to separate politics and policy from the creation of money. Now, the creation of money, as the central banks have a lot of power, they not only decide the amount of money, in fact, they don't decide, are the banks private, they have an enormous power to manipulate interest rates and so on. And then it's logical that people say, well, we are going to use that to correct inequalities. We are going to use that to have a more green economy and so on. Why? Because now the creation of money is politicized. But if you have an institution that the only decision is to create money, and this institution not takes that money and interfere in the financial market like now, but are the citizens or the parliament who decide what to do, then you have separated the creation of money from the politics, and that is very important. I think one of the the only characteristic, the only good characteristic of the system, of the current system, I think is really very bad and very worse and full of problems, is that the creation of money is decided by a state body, by the state, public, but with a certain autonomy and independence. Because if you give the creation of money to the politicians in the parliaments or in the governments, well, you are going to have inflation, you are going to have, well, because they are going to do that. I mean, and that's why it's the only characteristic.
I just want to say one thing though, but this is unfortunately, there's a paradox here, because in order to get this transition started, you're going to need something from Parliament or the governing body, party to get this thing going. So there is no way that you can avoid this from being political.
Yes, no. I mean, the creation, I mean, the structure of the system will be decided by the parliament. There is no other alternative. But the parliament could decide judges, the judiciary is going to be decided by one part of the government, or the parliament could decide that judiciary and judges are going to be different and independent. That decision can be taken by the parliament. And I think that the good decision about the system is to separate the creation of money from the political activities. That decision will be done by politicians. There is no other alternative. In a democratic country, all should be decided. But we know that there are, once you have decided that the judges should not be functionaries and employees of the government, well, you decided that they decide the sentences and so on independently, and has been decided by the parliament. I mean, it's not...
Well, that's the PMC plan is consistent with what you're saying. So once Parliament decided and it was put into place, then Parliament would have no more say. Yes. And the mechanism would just provide the funding.
Yes, that's, and there are many, I don't know, you are, I will try when I finish that, and I will try to see your proposal, but there are many possibilities that you can understand. But now is the moment to talk about that, and because one of the problems that I see now is what you say, that nobody talks about this, and this is very important. Who is going to take the seignories? What are going to be the powers of the, because of course, well, I am so happy seeing that 101 countries in the world are launching the CBDC, when 3 years ago, nobody thought in the possibility of having sovereign money, that I would say, well, I am relatively old, I forget, we got what we get. No, we need now to see how is designed the CBDC, how is designed the body, the committee that is going to create, to whom should go the money. And one thing is what to do in the transition, how to manage the transition is very important. Nobody wants to talk. Nobody will want to talk because, well, I think the banks do not want to talk about the transition that they are going to decide. And then nobody talks.
This is actually, this is another motivation behind the transition plan, is that this is one way to avoid a direct confrontation with the banking sector. If you could empower the central bank.
Yes, but what is important is to help them to stop being banks, because if they continue to create money, you are not going to get the benefits of public of sovereign money. Then they cannot continue. And it's not a question that you are going to decide like in the 19th century. In the 19th century, they prohibit the private banks to issue physical money, banknotes. But now don't need to do that, because it's so amount of protections that the only thing that you should do is to take out the protections, like in any liberalization. It's like tariffs in the international trade. It's the suppression of privileges in the telecommunication liberalization, where the telecoms were monopolizing all network services and so on. If we had not liberalized telecommunication, we had not been talking like now in this conference online, not WhatsApps, no whatever, no, impossible. No, that's why it's important to introduce liberalization in that oligopoly, but protecting the banks, not having problems in the middle.
Mhm.
Thank you, Jeff. Let's go. We're gonna take, I'm gonna guess this next question is gonna be a little more international and a big picture oriented with France. So,
Yes,
Franz-
after that introduction, Steve, I exactly want to ask Miguel whether the time has come that nations really start talking together. And I've been proposing that the General Assembly is going to be pushed to set up a UN Commission on monetary reform and transformation, not only reform, because reform has many meanings, and so we have to add in transformation. And so, given that you are so have a good overview of all of this and see how much is really brewing in 110 nations and every time and everywhere else, and also in the voluntary sector, also in the citizens movement in the monetary field. So don't you think that the time has come that in 2023, because there is an urgency to all of this, think about the whole thing about the climate, about health, etc., that there is an urgency so that the UN could start a UN commission in 2023. So that is the question. And a very kind of personal question to you in that regard is this. I feel, and I'm proposing to the AMI, that we present a list of participants to this proposed UN Commission on Monetary Reform and Transformation, and whether you would be interested in being listed as a member of the delegation of the American Monetary Institute. So that's a twofold question.
Well, Franz, obviously, I think that things could be done with that global idea, the United Nations, the possibility to do that, and obviously, if that were the possibility to do the things I would like a lot. But unfortunately, I am more pessimistic now. United Nations have not the simple possibility to avoid a war that has been an action against the chart of United Nations. And then I think that we are very far from a strong United Nations, a strong this kind of things. Then, but I'm not pessimistic about other things. I think that what I seen, all this money revolution, that is incredible. I mean, I couldn't think 3 years ago that 100 central banks were to launch sovereign money. That's something in 3 years, from the position and the declaration where this is stupidity, this is going terrible, we are going to... Then we have that. What I think we could do is try to reinforce the cooperative and collaborative institutions, trying to cooperate, that the design in 100 countries could have a similar or a certain characteristics that make them more interoperable and they more easy to have transactions or not. Why? Because if not, the problem we have is not that the problem of CBDC. I think that the problem is that there are proposals that are globally, but there are private, that are Bitcoin and stable coin. Then the problem is that Bitcoin is something that is totally global. There is no frontiers. You could buy and sell Bitcoin and so on. The problem is that private, and the Bitcoin, whatever is the governance, is decided. And that's why I prefer a world of nations where people control their governments in the democratic countries than these global proposals that could be private in a global level. Then that's why I am more afraid about how to organize the world with private companies, global private companies, so private initiatives, than organizing with state, nations initiatives that if they come from democratic countries, well, people have the possibility to control more than control cryptocurrencies. And I see that it's going to be unavoidable, the digitalization of money on payments, because with these technologies, with banks now, a transaction between countries, Spain and United States, takes 5 days and cost, well, to migrants 6%, but to one company 1%. And with a stable coin, it is instantaneous and no cost, 0.000%. Then we have technologies to do the things much, much better. And in my view, as I said in the speech, the things have not changed because central banks or regulators want and like sovereign money, but because they are seeing that. I mean, the new technologies is the driver of this revolution. Then we should profit from the new technologies, and not stop them, as it happens with telecommunication. Now we have this meeting, and that would be impossible if we had maintained the monopolies of telecoms in all the countries, because the possibility of competition now, the possibility of sending WhatsApp, the digital photography, the digital video has been, thank you to technology, in a relatively competition market. Market do not solve everything. Competition do not solve everything, but it's a best way to work and to plan the interventions of the state to correct what the market cannot do.
I agree with you that probably the way forward is like an EU approach. So you get regional kind of monetary unions, and that also start adopting a global view. And so it's a kind of an if question. So if the American Monetary Institute were to suggest to the General Assembly, together with others, of course, would you be interested in being part of that kind of discussion on that list that the American Monetary Institute might accept? We really haven't discussed this yet, but that might be a future discussion. And so the question then arises, who is going to be part of that AMI delegation? And so I was wondering what your feelings would be.
Franz, keep me informed, because I am very interested. Then I will see. I'm very interested.
Very nice diplomacy. Nick jumped in here, and then Lucille. Nick, go ahead, please.
Thank you, Miguel, for your wonderful presentation. There were a couple of things, you're familiar with the NEED Act that was put into Congress in the United States in 2011? That's the monetary reform most of us are.
Well, more or less. I read at the time, but I didn't follow that says. Because my idea is the following. I think that 3-4 years ago, all these kinds of movements were very important because in different ways, no, they got, and I learned from you, from others, because nobody talked about the money reform. But now the money reform is in the whole world, in the web. It's been discussed, different proposals in United States. In United States now there are at least 10 or 11 proposals to regulate stable coins and so on, and CBDC, and then now the debate is there.
Well, concerning the transition, from bank deposits to sovereign money. Now that was covered in the NEED Act, that the bank deposits sitting in the banks, the deposits that were created with the loans, would immediately become U.S. money, sovereign money.
Is the Fisher idea.
And as they were repaid to the banks, that would be sent immediately into the U.S. Treasury in a revolving fund.
Yes.
Okay, so I think there was a little discussion earlier, the problem of changing from a deposit system to a sovereign money system would be very involved in everything. And this would be something that would happen overnight. So we might want to
Yes,
take a bit closer. I mean, I appreciate everything that you're saying, what our Federal Reserve doesn't want to say to us, that how our money is.
The question is that I think that the new technologies provide ways to do those things easier than in the past. Then, because the possibility of have a register where you have digital money that are tokens, then you could use that money like cash now, without intermediaries. You could pay to this person from this person because you have the tokenized money, and then it's not the way all central banks are thinking. They are thinking more in a more traditional central register. But what I want to say is that we should be very attentive to the new ways to doing things. I mean, I insist in the comparison of telecommunication. I don't know if you use WhatsApp, but the WhatsApp was incredible 20 years ago when we liberalized the telecommunication. You could send an email free. You could send a video free. You could have a talk free. Well, that's why the new providers of payment and services are going to do the things very differently and better with lower cost. Why? Because now the banks are very costly. They have to get profits from different types of interest rates. No, I pay this and I take this. And the new service providers are not going to gain money from that situation. They are going to gain money from data, like Google, like Facebook, like others, because now the money, the profits come from data. They are not going. I am sure that they are not going to earn any commission. Then I think that we should think in how to organize this with the new technologies.
Yeah.
And that's why many proposals of the past have not a lot of sense now, because now things could be done in different money. What is important is to maintain the essential idea of the sovereign money. But
Yeah.
how is going to be the technology behind that is different.
I think that really we have to keep in mind in our discussion about this what money is. And if we're going to just say money's a payment system and the new technologies and all of this, okay, that they have they'll have their function, but money's power. It's the power of the state to make the economy to work, to make us have lives. I mean, if we don't have money, it's the most important thing in the world, money. If you don't have money, you can't do anything else. And that's this tremendous power. And if we fall into traps sometimes thinking, well, it's a payment system and technologies and all this. Money is a power. It belongs to the state. And the people are the state.
Yes, but the advantage of sovereign money is that the power of money is in the hands of citizens, because no banks have power because you don't have banks. They are going to be just intermediaries. And you don't have the powers of the central banks. Then where is going to be the power? With the sovereign money.
I agree with you that belongs to the citizens. And I think one of the things that reading a lot of this stuff about sovereign money from when there was a discussion, whatever it was, a month ago or so on central bank digital currency and payment system, that money was being relegated to being a payment system. It's a final means of payment, but it's more than that. It's the most tremendous power in the state, perhaps greater than democracy. And I know there's a little discussion in the chat here about level of democracy, and our level of democracy certainly has to be upped. There's no doubt about that. But money is this tremendous power, and we don't want any you're a banker, former banker, I think, or whatever, but we don't want the banking system to relegate money to being some sort of a payment system, because it's more than that.
Yeah, okay, Nick,
Well,
money, go ahead.
No.
Okay, well, let's get on to the next question, because we want the Hispanic audience to be able to ask questions too in Spanish pretty quickly here. Okay, Lucille.
Yeah, so thanks very much, Mr. Ordonez, for being here and for your work. It's very important. I have two questions. Actually, I can even put them in the chat. But the first one is, to what extent is your proposal gaining traction among the bankers, the central bankers, and the government representatives with whom you interact? That's the first one. And the second one is, what do you—
let's just keep it with one at a time.
Okay. Yeah.
Your interactions, Miguel, with other bankers and central bankers for your ideas.
To what extent is your proposal gaining traction with people at those levels of work?
Well, I don't have a proposal, no, but I of course have an idea. My main idea 4 years ago, when I met in Madrid with the American Money Institute people and so on, and many, was that it was very, very important to create and to launch sovereign money, digital public money. And that has been done. I mean, I would say that, well, 99% of the central bankers consider that it's important to have a sovereign money, digital. Then that part of my idea it has been spread along the world. I insist that has not been done by, well, people like myself or organization asking for money reform. The driver has been the technology of the stable currencies and so on, and the central banks have recognized that if they don't have a digital public money as they have a physical public money, they will lose all possibilities to control monetary policy. Then I think that, as I mentioned with the other question, I think, for instance, in stable coins, that the stable coins that, well, we should approve, I mean, all countries, all states, the United States and so on, should be the stable coins that are 100% backed by digital sovereign money, by CBDC. Why? Because if we don't do that, the problem is that we are going to have the same problem we have with banks now, that the stablecoin could create money. They could not create money if they have to have 100% reserve for the stablecoin created. Well, if you ask me, this idea, how is, well, I don't know. I follow, you live, I don't know, in the United States, and you see that there are an important lobby in favor of stable coins that are not backed 100%. But there are other people in the United States, many people, and some of them are working in central banks or not, that they see the problems and they try to avoid those problems. No? Then I think that the debate now I think is evolving in the good direction from my point of view. Is good. What is the good direction? Money public, competition in payment services. That is very important because that could be a great step in more productivity, more growth. Sometimes I think that we have all the problems of climate change, the problems of inequalities, all the solutions of climate change and inequalities in the short term diminish the growth, not in the long term. And this revolution in money could help to develop a lot of initiatives and increase the GDP, like the telecommunication and other liberalization. That's why I think it's very important, because it's a revolution that could, as well as the entrance of markets in China and so on. I believe in that the things that should be provided by privates is better to have competition instead that the state give a monopoly to the banks to provide payments. Now, you cannot make any payment without having a current banking account. That's why, for instance, the Mark Zuckerberg, the Facebook, when he launched it, now he has retired, he has withdrawn the proposal, but he said, I am proposing that 1,700 people in the world that do not have a bank account, but have a mobile, are going to be able to be able. That is a fantastic movement in the favor of inclusion, in the favor of having many people that is out of the financial system. No? Then that's why, well, your question is, I would say, well, this, I think that is going this direction. We are in the center of a debate. And all the lobbies of banks, the lobbies of stable coins, the lobbies of Bitcoins are there. And that's why I think that we should think in the public interest in this new form of money, because now we cannot talk about how to reform the money. That is being done in that big debate.
Right. I mean, I think, I just want to clarify, are you saying that you and the other central bankers, et cetera, the government people you talk with, think we should have digital sovereign money? Or are you saying you and they think we already have sovereign digital money?
Well, they are, if you see, for instance, the state. President Biden approved an executive order 9 months ago.
Yes, I know,
and they
to study it.
Yes,
study
and
it.
then, but if you see the last interventions of Janet Yellen and President Biden, they said that sovereign money, sovereign digital money, that is CBDC, digital dollar, whatever you could name it, should be the core of the new money system. That is what they say. I mean, and that's why, of course, what happens? That, and in Europe, we are going a little in retard, no? But what happens? that the bank lobbies say, well, if you do that, we are going to collapse. Then they are trying to introduce limitations to the use of sovereign money, or any ways to avoid that the use is going to be extended and so on. And that's there where we should intervene and say, okay, we should help banks, but we want a system that is going to be totally public, and the banks should be converted in intermediaries to use that public sovereign money to give to all the population and the citizens and so on. And that's, then now the things are not, there are many things where we could intervene, proposing something that is better in the interest of all citizens. No? And I think that we should work in that, well, any of us in our possibility, no? Because what things have changed dramatically. Now the reform is open, is full of initiatives, is full of lobbies. It's different from what we were doing 3 years ago, 5 years ago.
Right. So that was my second question, was if we agree that we can and should have 100% public money, and then, you know, the private intermediary system, what can monetary reformers, people like us, and monetary reform organizations do to help that get traction and actually be the outcome? What do you have specific suggestions for what normal people like us should do?
My idea, I am nobody to tell what you should do. I am trying to do what I think.
Right, so what should we do?
In a very individual way, with a blog and some conferences and so on and so on. No, but I think that there are many things that we should, you could thought the powers of the central bank, where the benefits of the creation of money should do. Then there are many small things, well, trying to see what is better for, not just for banks, not just for cryptocurrencies, not just for everybody interested, but you you are expert in thinking in the public interest. Then you could apply to things that look small, but they are not so small. I mean, the kind of what is the power, what is the no? I think is.
Yeah, thank you. That's helpful.
And I want to say thank you to Miguel too, for being an intellectual diplomat in this monetary world, because what you're giving us, Miguel, is the ability to push upwards. There's a lot of people, and the AMI will continue to reach out across the world and work. We got now a Brazilian person who's going to speak tomorrow, and we're going to try to be bringing in your ideas too. So we're happy to push up while you educate us from your experiences. So we thank you for that.